The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday. Of course, Monday was a holiday, but Monday through Friday, 11 o'clock till noon at 877-927-6648 on this, what is 16th day of February. And let's just hit the old numbers right away. Thank you to our hosts, starting off at 7 o'clock this morning, going all the way through to 6 o'clock tonight. And we've got the Dow up 61 at 16,035. S&P's up 10 at 1875. The comp index, if I can just find it over here, give me 1 second. The comp index is up, not as much as, oh no, it's not bad, up 43 at 43.80. And you've got a gold down 23 at 12.16. Silver's down 41 cents at 15.38. Platinum is up 85 cents at 9.36. Copper is in that 2 area, 204. Not bad. And crude oil is at 28.90, up 54 cents. You got bonds down 19.30 seconds at 165 and 28.30 seconds. And I'd like to just find the dollar. The dollar should be up. Yep, it's up 81 cents at 96.80. Now let's get to the nitty-gritties here. As far as I'm concerned, the action that we saw from Friday on the shorter term, what I mean by that is within the lower Friday, 5, maybe 8 sessions to the upside, and then we're going to, maybe not as many as 8, but at least 5 sessions there should be to the upside. And that's where we're going to get a real test of whether this is just a bounce within a very heavy bear market, whether it is going to be a stronger bounce within a chunk of the bear phase having been completed, or if this is the start of a brand new move to the upside. I think the latch is going to be very difficult. My contention right now, and the way we are trading it in my opening call in the Traders Corner, that's the section of my daily newsletter that goes straight to the heart of the techniques that we use, as well as the positions we want to take. When I'm looking at this, let me just move this away. There you go. When I'm looking at the different contexts within the larger arch formation, my thinking here is that the persistence of the arch is telling us that that is the pattern du jour. Not only the pattern du jour, it's the pattern the week, the month, and 120. And what we've got to be considering is, what do we do? Do we just wait patiently and say, okay, let this play out, and then we go back to heavy shorting and see if we can get the downside momentum again? And this really goes to the heart of what we saw on the Friday into the Sunday night, into the Monday action. Because so many people were unable either to get back in or just watched it from the sidelines, a move of now a couple of 100 points, good few 100 points, says to me that there's a chance that the majority of people have missed the move. There's a chance that they will not be able to get in. They weren't going to be buying this morning at the opening because that would have been just too hazardous to their health and wealth. But surprise moves. We're down from the high. We're down almost double from where we were at the high, and the Dow is up 64 and the S&P is up 11. There was a period where the futures were up 25 to 26 points. So we've given back a chunk of that. So what we need to do, and one of the things that I spent a little time on this weekend, didn't have as much time as I usually do. Usually I'm sending out, especially on a long weekend, you can be assured that you're going to get 12, 13, 14, 15 charts. I didn't do that. I have the grandkids here, so I decided, you know what? We got the turn on Friday. We managed to flip from the short side to the long side. Let's just see how this can go. And I have a couple of positions that I want you to add to on the long side. On the short side, I'm still waiting for a couple of shorts that I really want to have patience for, because I think that these are the areas in stocks that will go down. So let's just look at this in terms of the context of, move this away, weekly and monthly charts. I think this is the start of a new week. There's nothing much that we can do right this moment other than to say, look at the chart of the Dow. Am I going to be able to hit that correctly? There it goes. That's it. So that's daily on the left, weekly in the middle, monthly on the right. And what we're looking at here is that within the context of those two very unusual, one candle and then one lower down, as you have in the S&P, is kind of normal. But it is not normal to have sideways move like this. You see the candle that we had in, right there, the candle that we had in August, that Roman candle in the S&P index, in the monthly chart, was matched by another candle with a lower wick. That's kind of normal. That's what you normally see and that was the January low. And then in February, we actually went to a lower, let's just double check that, because 1812.29, 1810.10. By 2 points, we went to a lower low in February. All of that is kind of normal. What is very unusual, and one of the things that I've been talking about for a while now, and saying that the pattern that the Dow components, for the first time, I would say since the mid-'80s, where I used to think it was a pretty good, accurate rendition of the general market, this is the first time that I'm actually feeling that this is a pretty fair synopsis. I'm a little upset that there be three. You've got V, that's Visa, you've got MasterCard and American Express. I think that's just too many in the financial sector. They should have had a bank instead, a JP Morgan maybe. So, but other than that, you got your two oils, Chevron and Exxon. I mean, you've got Disney. Just, I think it's working quite well. You've got Boeing, you got your old high-techs that are actually now the new high-techs, Microsoft, Cisco, etc. So now I'm not prepared to accept that when people say, oh, it's just the 30 stocks. Now it isn't just 30 stocks. Now it is, for me anyway, it is a really good mix. It really is telling me a deeper internal structure that I can get my hands around. Good, okay. So it's this monthly chart that held the support, just as you see patterns repeat. And you remember the pattern that we were looking at in the Dow? I'll go to this chart that I show my subscribers every day, every market day, that is. Remember that base that was formed in the high 15,900s? I call it 16,000 just to round it out. Right over here, starting from that August low, there was a nice bounce from the 15,370s. It went up 3,000 points to the 15,669 area. And then I didn't say that. I meant to say 23. I don't remember what I said now. So it goes from 15,370 to 16. Yeah, that of course that's 1,300 points, and why am I doing? Yep, 1,300 points, and then it came back and it kept testing the 15,970s area. I called it 16,000, and what happened is there was a fabulous rally, and then it came back and tested, and then you started a much bigger move. I'm not expecting that that's the pattern we're looking at. I think we are going to be retesting the most recent low. So the way I'm looking at it right now is that this bounce should form some kind of a second arch formation that takes it from a lowercase h to a lowercase m, and that we should be moving higher, and it won't be fantastic, but it will be higher enough to make some money as a percentage. I'll be back. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And, of course, I had a bunch of questions. Whoops. What happened? Okay. So I've got just a real quick question of the day, which is NLY. Would I buy it? NLY is Annaly. Capital Management. You know, it's had a really nice move. It's gone to a peak A, and then it stopped dead at the 200-period moving average. It's making that 200-period moving average at 9.87 NLY, trading at 979. It's making it a magnet. I would not think that it's going to get a weight to the upside just yet, but I think it has to do some backing and filling. And the chances are it's going to go between 992-ish, 995. I'm not sure it'll get to 10 just yet, but the 980s to the 990s. And then it'll come back down and do some retesting in the 970s to 960s. So my impression right now is that if you're looking at it more as an intermediate term, and I think peaking in the den, that this is kind of the way you would be looking at it, I would actually start a position right now. I'd only start the position. It would be a small position at 979, and I'd do two things. One is my objective would be this very ugly candle right here, the week of the 6th of November, where it opens at 995, pops a point, 10 cents high to 1004, but it closes near the low of 942. And that's the candle that I treat as at least look a nice percentage. So I'm going to suggest you start a position here. You have two choices there. The one is you just have a little patience, because at 968-ish area, that's where you want to be checking in to see, is this where you're going to add? But if you start a position now, and by Wednesday, Wednesday's tomorrow, by Thursday at about this time on Thursday, between now and 1 o'clock, 11 to 1 o'clock Eastern time, if it's trading above 987, above this 200-period exponential moving average, which is also above the 200-period simple moving average, I'm going to suggest to you that you could even add just a little bit as a second position. But that second position at that point has to be a little bit smaller. If it was to pull back to 968, I'd wait just a little bit. I'd probably want to buy it at 971. In other words, I'd like it to test, and I'd like to get it on the bounce back up. The reason why I'm being a little bit fussy about this is that the weekly chart has had a really nice move to the upside, but it doesn't look great. It's just a really nice move. The technicals are still 76%. That's good, but not great in the stochastic, and the MACD has turned up, but I got some other signs that saying there's a little bit of resistance. No, there is enough resistance in the high 9s and 990s to say that it might work. It might take a week or so before it really gets going to the upside. At the same time, the way the monthly is, this is the start of a move that has to succeed in February. I wouldn't go later than February. It has to in February be above 1059. Boy, if this thing can get above 1059 in February, that would be a really good sign for NLY and say it is out of the woods. It is in now a more intermediate term position. That's why I'm saying start a position right now. But where would I put a stop? Well, if it doesn't stop, it's 968 on the next pullback and goes to 961. I say, hey, just be a little careful. I know that you're more intermediate term, so you can give it 952 was the low of Thursday, last Thursday, I believe, the 11th. I'd give it a little bit of room, 948. In fact, I just give it a little room. I don't think it's going to go all the way back down. If it does do some testing, it might be time more than price. It is acting well enough that I feel a little bit more confidence in saying I think that this has a good chance to get to the 10s by the end of February. Okay. The next question I had was the CRB index. Would I please chart the CRB index? Here it is. And that's going to be dollar TRCCI because it is the Reuters commodity index, and it's actually not just the Reuters commodity, it's the equal weight commodity index. You see, when that was a good example, NLY, Annaly, because you've got another stock here, not a stock, but an index that is based on many of the commodities, and it's got equal weight in the commodities, and it is showing just the barest sign here of trying to rally. My thinking really goes to the heart of the matter, which is that we're in a deflationary period. I don't see any other way around it. And as such, you've got to consider that the commodity index is attempting to have some kind of a balance. At this particular point, midway through the month of February, it should be above 375. The high was 374.23 on the 4th. It shouldn't be pulling back like this. By Thursday afternoon, Friday, it really has to be expanding this range to the upside. Otherwise, it's just forming yet another arch formation. And so far, the 9-period moving average in the weekly chart is just not good. Would I do anything with this? No. I'm afraid that I would still be staying away from the commodities. And I'd spoken about possibly the DZZ, but I decided not to do that the other day. I was thinking that I got a top coming in the gold index and in gold itself, at least a short-term top. I'm looking at this. Look at the chart. This is the this is the DB gold double short ETF. Look at this left side. Now, yes, there's an island reversal. But when you get currencies or you get any instrument that trades overseas first before it trades here, you're bound to get some gaps. So normally I'd say, hey, this is not a big deal, but it is a big deal. Why? Because you had the stochastic rising, a nice divergence. You had the MACD coming to a flattening right there. It's trying to turn up. On-balance volumes already in leg B. The histogram, the little vertical lines, are starting to move up. So this might be more than just a little bit of a balance in the DZZ. I think at 655, up 34 cents. I think it has a chance to get towards the 681 area. But when I looked at gold over the weekend, let me just go the GC. I think gold is holding well enough that I still would not be short, even though there's been, oh, my throat got scratchy there. Hold on. Yeah. So that even though we're looking at it in terms of a peak F, in the Chapman wave, still not finished with that scratchiness. Look at this. That's the weekly. That's the monthly. I'm going to open this up. And now we'll look at the monthly in a different way. Every one of these very big green candles from 2013 on, this is July of 2013 into August. Very big move up, percentage-wise. Excuse me. You had the same thing happen January, I think it was, January of 2014. February into March. March turns around, just like you got your turnaround in September of 2013. 2 bars up, and then you get your turnaround back in December of 2014 into January, and February turns around on its way down. Is this different? It certainly is different if you're looking at the stocks. If you want to just grab a bunch of the gold stocks, let's just go through alphabetically. Let's get my favorites. A is A. We don't usually buy it. I just treat it as a marker. Look, it is still holding beautifully up above from a peak D. It's still above the 9-period moving average. MACD is good. Stochastic is pretty good at 85%. Weekly is overextended, but still a very nice move. If you look at AU, Anglo Gold, look at that huge move. What a percentage gain. You see, these percentage gains, even in the monthly chart, not the best that it's been, but still pretty darn good. So I'm thinking here that there's something going on with gold, and I will talk about it because it relates to the domino effect that I want to talk about. I'll be right back. Basil Chapman, Dow's up 94, S&P's up 14. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 96, S&P's up 14 on this first trading day of the week, Tuesday, the 16th of Feb. And LNT was also mentioned, and this is Alliant Energy Corporation. You have a very good chart. I think it's getting a little toppy short term, but the daily chart, that is, the weekly chart, still seems to have some very strong trading at 66.94, down 2 cents. I had a question about the CRB at this particular point. my thinking still goes towards this kind of deflationary. I mean, the pressure is just all around the world to produce goods and to sell them as cheaply as possible, and in areas that are, oh man, I'll get into it later in the week. But remember, I spoke about the a la carte aspect of flying, how they're going to try to do that with automobiles. It is amazing. They're taking inexpensive electronic parts. I don't even know how inexpensive they are. They must cost just dollars, maybe $10 maximum for some of this stuff. And you can add on a rear view camera and all that stuff. I mean, this is nothing. What are they talking about? And they're charging the earth. So I think that I don't understand why the sales at the Ford, Ford is up, no, it's up 9 cents, not looking too great. I was almost going to buy a Ford or General Motors, and I thought, this is just, there are too many things going on here. I don't feel like that kind of risk at this particular point. We'll see what happens elsewhere. But in the meantime, back at the ranch, I don't quite understand why they aren't actually doing financially way better. All right, let's go to this. The question was about XOM and XLE. So XOM, this is Exxon Mobil trading at, did I miss something? Yeah, there it is. Exxon Mobil trading at XOM, right there. It just made a leg D today, and I think that together with bonds, it might be just a little short-term pullback, and that pullback will just be reflected with the VIX coming down, bonds coming down, which favors the stock market. Yields go up a little bit, and Exxon might be in that category. Now, the question is as a dividend stock. So we have a dividend stock, which is still holding very well, and it's in the telephone area, communications. I like it because it just seems to be in an area that is being favored right now by fund managers. And Exxon, I think, ever since that 66.55 low way back in the summer of 2015, I called it Wave 5 in Elliott, we've had a spectacular move from the 66s up to the 86 area, then all the way back down to the 72-ish, 73 area, and now it's trading at 80.50. As a dividend stock, my preference would be to say, look, a point makes a difference in your dividend. Well, it's a point up and it's a point down. So I'm going to say it's in leg D. My thinking here is that based on the MACD and stochastic, which are holding quite well, not great in the weekly chart, but the daily is really doing quite nicely over the 9-period moving average. I would wait for a test of the 200-period moving average. Right now it's at 80.53 where it is, 80.50, and 79.63 to 79 are really moving average area support levels. And I'm going to suggest this: have a little patience. Try to pick up some Exxon if you can get it below 76.50 into the 79 area. I'd like it not to break 78. And the most important thing, as far as I can see right now, is that the weekly has 79.03 as 9-period exponential moving average support. So just a little bit lower, and just treat it as a dividend stock. You don't want to give away too many points, because even though there's a dividend, it's just better for you to have I would have the safety of a 1.5 or so, 1.5. If it's treated as a dividend stock, I don't see it being spectacular. I think maybe it can go to the 83s. I don't know about the 200-period moving average in the weekly of 85.80, but I think it could go to the 83, 84 level, mostly sideways for about 4 weeks or 5 weeks. If that's the case, as a dividend stock, I'd prefer to get it about a point lower. So that's Exxon. And XLE. The XLE right now is trading at 55.23, and it's down 7 cents. And that hasn't quite got the Exxon chart. This is more, it's got XLEs, all those different in the energy sector, S&P Select Energy Spider Fund. So I'm just going to say, out of the two, I'd prefer Exxon Mobil, XOM. Let's see what CVX is looking like. I prefer Exxon to CVX. So that's it. I don't know about the XLE. It doesn't look like it's going to go too far. Next question I had was the euro dollar. This is the currency pair, EUR-USD. EUR-USD is trading, this is a peak F at the top right here. Let me just type it in. There was an alternate count, but this is certainly a peak F based on today's action. And that allows the dollar to have a nice bounce. Now, I have to treat the dollar only as a bounce. In that context of the bounce, it's sitting on the 200-period moving average. It's just above it. And that 200-period moving average is at 1.1126. It's trading at 1.1139. Let me just look at the dollar before I give you any ideas about the... yeah, you see the dollar. The dollar is definitely in not a short-term, but an intermediate-term consolidation. So I'm suspecting the dollar has a little bit more strength. It's at 96.79. I don't think it's going much higher than 97.70 to 98.30, somewhere around there. And then it starts to stall. That can give just enough room to the upside in the general market. See, here's the monthly. In that context, what we're looking at is having made a peak C. Let me just do this if you don't mind. Okay. Having made a peak C in the monthly chart already, this is the second month. And because peak C, remember I spoke about this at the time? I said I do not like to see peak C, the third peak in the Chapman wave methodology, only going fractionally above B and taking time to do that. And my thinking at the time was that the stock market might be in a belated follow-through, and there was just a chance that it could retest the highs of Dow 18,351. Once the market started to break, you had to be careful. So this is what I'm looking at. Dollar has limited upside, but there is enough upside that the euro needs to find some support. Now I can go back to the euro and say EUR, because I've given you the parameter on the upside. Certainly the dollar, any 1 point decline in the dollar from here will be quite negative. So the euro is in an area between 1.113 and 1.108. This is going to be the consolidation area. I would not be surprised if it tests the 9-period moving average in the weekly chart of 1.102. That'll correspond to the resistance in the dollar. That's where we're going to have to be real careful. So I hope I answered those questions. One thing that I want to do, it was what I had started out doing, and I'm not sure I even finished it because my suddenly scratchy throat has become a distraction. So let me do this. The context that I'm looking at here is that it was a perfect setup to have on Friday a pullback, take out any new longs, and then a spectacular move to the upside, followed through by a spectacular move overnight, Sunday night into Monday. That puts people in a very difficult position, over 16,000 in the Dow, over 18,075 in the S&P. What do we do now? Do we chase? They'll be forced to chase. I'll talk about my rule of 136 as soon as we get back. Basil Chapman, Tiger Technicians Hour. I'll be right back. Dow's up 114, the S&P's up 17.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Silver Wheaton was a question I had. Silver Wheaton, core silver company. Greg wants to know about it. He has a small position, wants you to add to it. He thinks it's made a peak D in the daily. Chapman wave, a 4th peak high. And it's pulling back, as you would expect from a peak D, but it's holding really well considering. And this is brand new leg A in the weekly, brand new leg A in the monthly. And what's really important about this is that in the monthly, you finally got, you see, there's something going on. And the something that's going on is telling me that the gold stocks are still in play. This is not something, they're overextended, but at the same time, they're in play. And why do I say that? I say that because there have been periods over the years that you see gold go first and then the gold stocks follow. There have been periods where the gold stocks go first and then gold itself follows. I prefer to see them in unison going together because somehow or other there's a tendency when they go together for that equilibrium to be playing off one another so that you don't get these sudden sharp pullbacks or sudden spikes that leave you kind of wondering what's going on. This is just the way I like to look at it. That's not one is better than the other, because if the price of something goes from 10 to 20 or 10 to 15 or 10 to 12, I mean, that's the most important thing, right? So what I am looking at here is that the MACD in the weekly is extended very nicely. I'm getting a little bit of an overbought situation here, but just a little bit. And the stochastic is at 69. I prefer it at 80%, but it's making higher highs and higher lows. The price is making low lows and lower highs, except for this last move this past week. So I like it. And I really, Greg, I think you've got exactly the right thing here. I would treat it as in play until it stops being in play, because I don't want to overthink it. And you're overthinking it if you look at the support at 1417 and the 9-period moving average and say, okay, that's a little tight. It needs to go lower than that. I think that's fine. But it's overplaying it if you start to see it in the 1230 area. That's saying, uh-oh, that's not a good sign at all. That's just too much of a pullback. But just pulling back a point and a quarter from here, or a point, I think that's great. So here's what I'd be doing if I was you. You got your position. I would not want to treat it as an average position within the context of starting the next position a little too soon, because what happens is, unless you've got 3 or 4 different places you want to get in, but if you're talking about just one more place, take a chance and just think about 1365 to, so 1365 is $1.30, 1365 to 1290. If at any point it pulls back to that level, that's where I would assess, and that's where I prefer to put in some new position. Now, let's just say you're only in at 12-something. That's a little different. If you're in the low 12s, that gives you some room, but if you're in the high 12s, Do you want to add another position that's lower down than your original position? In that case, I'm going to have to say to you, it depends where you got in, but you have to have a little patience. Because in your position that you've got now, if it suddenly spikes and you haven't got your second position, now the implication is that if you got it lower down, then 1250 in the low 12s or even 11s, that's fantastic. Then I'm going to say to you, then just have patience. You've got a good position. It's making money. You don't have to overdo it. But the real area of support, if it breaks to a new high above, especially with gold down so much over the last few days, if this goes, if SLW, silver wheaten, goes above, trading at $14.99, down 25 cents, if it goes over 15, it doesn't even have to close. If it just goes over 1537, sorry, 1536 to start a new leg up, that's going to make it much more difficult. And then you're going to need a little bit more time for it to pull back. So here we go. You're in it. Where would I get in for a second position? If you're in below 1250, I would treat anywhere between 14, let's call it 1420 to 1365 to add a position. If you're in it higher, I think you're going to have to wait a little bit longer. I don't want you to average in at almost the same price. So I would say, I mean, not now. But you can do that if by Friday or early next week, if it's pulled back to the 1342, 1365, 1342 area and it's holding, I'd say, okay, that's where you can consider it. But you've got to keep in mind now that you're going to have a stop that's different to the stop you would have had earlier on. Okay? Now, where would I project it going to? On the upside, 1570, I believe that's 1570. Yeah, 1570s is the 200-period moving average in the monthly chart, and it's not gone above that since it broke down back in July of last year. So I'm suggesting to you that the 15s, 1550 to 1570s would be my upside target for silver wheaten in February. I would prefer to see a pullback before it does that. And if it does pull back, be watching the dollar. And if you're watching the dollar, you've got to be watching bonds. If you're watching bonds, you've got to watch the stock market. Dow's up 111. This is the kind of action you want to see. Look, here's the dollar. Let me just show you. This is the IWM. IWM has had a really sharp move to the downside from 129.10 to the 93s. That is huge. That is a big move. And that's the kind of move that you can expect. The reason why I'm expecting some time to the upside as well as price is that so many Dow stocks, so many NASDAQ stocks, so many in all the different areas, certainly in the Russell 2000, they've had 25 to 50 or even more % declines. That is something that needs to be repaired to a certain extent before you go to that next leg down. So to answer a question, what am I really thinking? I'm thinking that we're in a counter trend rally, that we're going to rally, and the height of this rally is going to give me the clues to the depth of the next decline. And I do believe there will be a test of the recent lows of last week, but we're going to go up before we get there. It's not the issue. Nobody would mind another test of last week's lows. What if we go 2,000 points lower than we are now in the Dow, 200 points lower than we are in the S&P right now? 1682 instead of 1882, 14,087 instead of 16,000. Those are big numbers. So let's do one thing at a time. I want you to see how we're moving to the upside. I want you to see how the VIX index handles VIX.X. Of course, you got to hit the right place. VIX.X. There it is. How does it handle the 9-period moving average? Well, now it's nicely under. 2501 is the 9-period moving average in the volatility index daily, and we're at 2459. We're at the weekly right here in the middle. It has not gone to a peak D. It is pulling back in 2284. This market cannot really succeed in having time and price to the upside unless the VIX goes into the 22s and lower as the market moves higher. That's the full market. That's all the indices. And then it'll sustain the rally if the volatility index goes into the high teens. It's just, for me, it's as clear as that. And until you get that, this is just the starter position. I said I talk about 136. Within my technique, consolidations in a bull phase or a bear phase should last no more than 1 day, perhaps intraday even, before going to a recovery high or recovery low. 3 days max. 6 is too long. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, just looking at the E-minis. This is a nice move up. And what's going to be really important is if this move at up 133 in the Dow, up 19 in the S&P, but up 2275 in the E-minis, it needs to take out, I think it's just done that. Let me just double check here. No, it hasn't. It needs to take out at 1881.25. It needs to pierce 1882, maybe make a peak A in the 10-minute chart. But then it needs to clear the 20 to 10 high of 1883.25. And what that'll do is start to test the downtrend line, and that's going to be important. My thinking here is that scary move down of about a 50% decline or more intraday, as said to many of the fund managers, but only the ones who are prepared to look at this as an entry point that might or might not have legs, but you've got to be in it to be playing it. It's kind of the way you have to look at it. That's the way I'm looking at it. It's why we've added to our long positions this morning. So far, the day is young. They're looking great, big deal. But it's the end of the day. How do they look at the end of the day? And that's going to be really important. Now, one of the things I looked at very closely is the XLF, and I'll tell you why. The XLF trading at, this is the S&P Select Financial Spider Fund, trading at 20.71, up 22 cents, had an island reversal from Friday into from Thursday into Friday, and then today being the first trading day since, it's got another gap to the upside. And I'm looking at this and I'm saying, why? I actually looked at this and I looked at JP Morgan as potential. And I thought, gee, you know what? Nice move. Look at that island reversal in JP Morgan. For 52.50 was the low. Trading right now at 58. That's 6 points, or 5.5 points higher than it was just 3 days ago with a beautiful island reversal. I happen to like what I'm looking at very much. And this is the one thing that says to me, you know what? We might be in for a surprise. All the bears might be that. I want to be on the long position right now. We do have a short position. I think we still do have the short position. Yes, we do. And I want to be there because I'll tell you why. There are times where you get in and everything looks very negative. Everything sounds very negative. But the more you do your homework, the greater you start to see just enough positive divergences that say there could be legs to the move to the upside. It might be time, it might be price, it might be a combination, or it could have just been a brand new buy signal and it just didn't give you all the clues. I did not get a brand new buy signal from the way the VIX acted. It was disappointing. I would have liked to have seen a real, one of my fabulous VIX spiral to the upside with a volume reversal in the price of the S&P and the Dow, with a turnaround that says you've got 28 days or more to the upside. I just didn't get that. But I did get a couple of signs that say when I went through and I did my homework and I looked at enough stocks to say, hey, you don't get 25, 35, 45, 55% declines without a pretty darn good rally or just a complete failure, and we didn't have the failure. So I'm looking at it and I'm saying maybe the surprise is that people have to scurry all of a sudden later in the week to get on board. And that I wouldn't have got JP Morgan or the XLF because they gapped up today. I wasn't prepared to buy a gap up in these. I bought in other situations I might, but not here. But this is something very different, and I'll explain why. Because the financial sector is really important. Not so much dividends, not so much interest rates and all that stuff. Historically, it's really good to see the financials doing well in a market. It just says, it's just a good sign. They've been acting terribly. But JP Morgan, with that very bad candle of August, has in fact held well. Wow, that's the end of the show. What a quick show. That's what happens when you're having fun. Folks, the Dow's up 140, S&P's up 20. I'm going to hand you over for your swimming lessons. Boy, we get snow lessons here with ice and everything. But it's going to be nice for the next few days. So have a great day. I'll see you tomorrow. And thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.